Thank you so much for having me. It's a pleasure to be here. Get these slides up. Yeah, that's perfect. Yep. I just press this one right to just Thank you so much for having me. It's really an honor to be here, guys, especially for such an important organization. I'm really honored. My name is Henok. I'm a licensed certified public accountant. I've been in the tax space for nearly 15 years. So we have a firm called HK Financial Advisory that's based here in North Virginia. We now mainly focus on working with small business owners and professional nurses just like yourself. And so today what I want to cover is in this short span of time is how to keep more of your earnings and stop overpaying the IRS, because I don't think everybody likes to do that, right? Okay, I want to first start off with a question. What do you think is your single largest expense that you usually have? Mortgage, rent, what is it? Student loans. All those are good. But think about it. When you make money, you pay income tax, right? When you buy something, you pay sales tax. When you purchase a property, either twice a year or once a year, you pay property tax. And when you sell that house for more than that you paid for it, you pay capital gains tax. And then here in the United States, whenever you pass away, we have what we call estate tax. And so taxes are everywhere in every single step of our lives. The crazy part is that's not the biggest one. The biggest one is what we call the ignorance tax. Essentially, ignorance tax leads to overpaying in taxes because we are unaware of how taxes actually work. And nobody really teaches this in school. Even I myself went to school as an accountant, studied for my CPA exam. Most of the stuff I learned is on the field. So the largest one is what we call the ignorance tax. And the reality for most of us that are W-2 employees, like some of our nurses here, is that the way the tax is structured, you get taxed first, meaning the IRS gets their cut first, and then you're able to deduct, meaning how much of your income you're able to reduce to pay taxes on. All right? And even the deductions then are super limited for you as a W-2 employee. And then society tells us this refund illusion, meaning when you get a higher refund, that's actually a good thing. It's the total opposite. Because when you get a refund, what that means is IRS held your money for a whole year without giving you any interest and is giving it back to you. So this is how it works whenever you file your tax return. You calculate how much taxes you paid on your W-2. Then you calculate how much taxes you should have paid, right? And if you overpaid in taxes, the IRS is like, okay, thank you for the loan, here goes a refund. So the goal should always be to minimize how much taxes you pay legally, to minimize how much taxes you pay throughout the year.
Thank you for the legally.
Yeah, my license depends on it, so. All right. So here's a key difference that most of society deals with. So we have tax filing and then tax planning. So tax filing is what we just kind of went through this week or this past few months, right? You take your W-2s, your 1099s or whatever to your tax accountant and like, hey, can you report what happened for me? Literally just reporting history. There's nothing you can do about it, nothing you change at that point. The year is done. You're dealing with 2025 stuff in 2026, right? So that door is shut. Tax planning, on the other hand, is more proactive. It looks forward, right? It's adjusting your W-4s if you pick up extra shifts to minimize how much taxes go out of your paycheck to the government, right? So the key is tax filing is more compliance work. It's required by the IRS. We all have to do it annually. Tax planning, though, that's strategy. That is how you control how much money you keep in your pocket, right? Make sense? Okay, so here I want to quickly share the do's and don'ts. So when you're a W-2 employee, normally we just fill out our W-4s, which is the exemption form, once and we just kind of forget about it. But you have to think about it. You may pick up more shifts as a nurse, right? You may make more money in a season. So that means you're going to be bleeding taxes because you're not adjusting your W-4 according to the changes you're dealing with, right? So you want to look at your W-4 more proactively. So if you pick up more shifts, you may want to adjust it to make sure it's optimal that you minimize your taxes. The other thing you want to focus on is taking advantage of employer-related benefits. So we're talking 401k, 403bs, your HSA accounts, your FSAs, because these are all pre-tax money, meaning no taxes has touched that money yet. So you really need to review that and make sure you take advantage of that because those are directly benefiting you towards your retirement, your healthcare, etc. All right. So do not wait until the end of the year to consider reviewing your W-4s. Please start proactively looking at it. And one thing I want to mention, we call here the evolution from W-2 to 1099 is our firm has helped some nurses that have transitioned to be 1099 independent contractors. And the main difference is, like I said, W-2 folks, you guys are taxed first, right? The IRS takes their cut first, and then you get to deduct, meaning how much of your income will be reduced in terms of your taxable income. On the 1099 side, though, it flips, meaning you deduct your expenses first. So, meaning you control how much of your income is subject to tax, and then you cut the check to the IRS. So, as a 1099, you're essentially a business owner. So, you essentially control how much of your money goes to the IRS. All right. So, that's the big significant difference between W-2 and a 1099. So, if you guys are considering 1099, it's a good thing. You kind of get control of your money. But even as a W-2, there's a few things you can do. So I want to emphasize tax planning because that's really, really important. That is one way you kind of grab back how much of your money goes to taxes. All right. So proactive decisions, they're really, really important. So take your time to review your W-2, talk to your tax accountant. Like, for example, at our firm, for our tax planning clients, we engage with them 4 times a year, every quarter, right? Because things change throughout somebody's life. Like they pick up more shifts, they pick up more income, right? And when you talk to your tax accountant after the year is done, the next year, there's really not much they can do. The year is closed. We're in 2026 trying to figure out 2025, right? So you really want to start engaging with your tax accountant more often than waiting until the year is done. Because trust me, your pocket is going to thank you. And then I'm sure the organizations are going to thank you because you're going to have more money to give to the organizations, right? So, so I know we have limited time. So what I did was, and I want to leave some time for Q&A, this is a guidebook that we put out for our clients. You guys can take out your phone, scan it. For the organization today, it's completely complimentary. We usually sell this for $47, so you guys can scan it. When you download it, I believe you also get my contact information. So if you have any questions as it relates to taxes, if I don't answer it today, you guys can reach out. All right. So as you guys scanning it, I want to open it up to Q&A because trust me, talking about taxes takes more than 10, 15 minutes. So any questions I can answer. Get the guide. But yeah, that's a loaded question. That's a loaded question. No. This right here on the screen is my QR code. Yeah. And if it's not working, yes, yes. 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 Not W-2 or 1099. Yeah. So that's the thing. Unfortunately, for W-2s, you're limited in terms of what you can deduct. Normally, for CEs, your employer is responsible to reimburse you for that. And if when you're an employee, those kind of things are not an option to you. The only thing you can deduct is like charitable donations, etc., as a W-2 employee. But if you're a 1099, that 100% is true. You can deduct the CEs, the travel, etc., etc. Yeah. Any other questions? Yes. Yes. An individual? Yeah, it's not a must, but depending on how much of that is going to be in your income, I would highly recommend it. And the reason is you get to separate yourself as an individual from the business, right? So if anything happens, like liability wise as a 1099, usually you're on the hook, which could lead to lawsuits, etc., right? But if you separate yourself and create the LLC, if it's a serious portion of your income, highly recommend it. But you don't have to, it's not a must. Does that answer your question? Okay, cool. Yeah, you're welcome. Any other questions? I know tax season just got done, so you probably don't even want to think about it. But IRS will come knocking on your door. I'm kidding. No, that's not what happens. No, so normally what happens is your employer or the company you work for will report the same information on your W-2 to the IRS. So IRS is going to expect you to also report when you file your taxes. If you don't, they usually, their system will catch it up, and within 3 years, you'll get a letter saying, hey, you didn't file this, so you owe us this balance, or here's your interest and penalties, et cetera, et cetera. So I wouldn't not file your taxes because they're ruthless about adding interest and penalties. So yeah, don't do that. Yeah. Any other questions I can answer? I'll be around here too if you guys have questions. Yeah.
People who are trying to, form their own business.
Yes.
What's more advantages for them with LLC and
S-Corp.
the one
S-Corp. Yeah. Yeah, that's a great question. So a rule of thumb we use at our firm is if you're expecting to make $60,000 in profit, then go the S-Corp route. If you're gonna be below profit, okay, not the gross revenue, but profit after your expenses, if you're below $60,000, then you should stay as an LLC. And here's why. Forming an S-Corp, you get to reduce the tax exposure, but you're also required to hire yourself as a W-2 into that company, right? So when you do that, there's like payroll cost, there is tax filing that you have to do separately for that. So the cost of that wouldn't really outweigh if you're making less than 60K profit. So that's kind of like the benchmark we use at our firm. Yeah, you're welcome. Okay, good. All right. Any other questions? Going once, going twice. All right. Well, take the QR code. It's a free guide, complimentary to you guys. It was a pleasure being here. Thank you.